Hey guys, good afternoon. We had an interesting trade session today. Let's go over all the details. This morning we had the volatility come in early and the market reacted positively at first for the non-farm payroll and then reversed into the daily three. And interestingly, we hit our higher time frame levels pretty accurately. Here's the 7-day three to the tick. And here's our monthly three. Came right down to this monthly three and our quarterly three level that I have been watching. Okay. So the quarterly level from the quarter high to the quarter low, from the high to the low, was right sitting on this monthly three level. And we got this huge bounce out of it. That was quite the reversal off of this monthly three and off of this 7-day three at the daily three. So it was just the threes everywhere. So that's a great V bottom. And the best part for me was it was a dip. So they did show dip buying. So the dip being our 90-day twos, right, that I was so worried about, right under my quarterly ones. Well, it did break, and I thought for a minute, we were going to lose it. I thought, for sure it would bounce at our 19,863 of the monthly twos. So it went down to the day to the ES levels, and that's the important thing to remember. Here we can see a 1.25 of the weekly, but critically, it wasn't just hitting the daily three and bounce. The market was going to the ES levels because they hedge with ES, not with NQ. Okay. So the SPX options are hedged with ES. And I just showed you we had the quarterly, the monthly, the weekly, and the daily threes. And so we had just fallen out of a period of the last week with the down move. Really since a down move since February 21st. And I think this is going to be the trying to get back up to 58.60. Now, I don't think that they're going to let it go back inside the one. So we could just go flat, between 58, or excuse me, 56.50 and 58.60. 56.60 to 58.60. And that would be for the next 2 weeks. But, stranger things have happened. It could come back and, test the bottom again, or, definitely try to reach up in there to get back inside. The quarterly mean is, sitting at roughly 59.60. So it might try to, park itself there by the end of the 2-week period if they allow it to go back inside. So that's about it. I mean, it was a good reversal back up. Fun, it was funny for me that the mainstream media is tied to the Powell juice, and they're rejecting everything that the new administration is trying to do to bring in real production, real jobs, real GDP growth, all of that is getting frowned on in the financial Bloomberg and CNBC media. And when Powell comes in and says, we don't have to be in a hurry to drop rates anytime soon, the market starts rallying. So I think the Jamba Juice is kind of funny, the way the markets are, controlled. But I hope I'm wrong on that. And this is just more of, you know, pure range positioning than anything macro. I certainly would, think that it definitely deserves a bounce here. We got way overstretched. So it's good that the ranges are holding up, but for the market to rally at that moment on the wrong reason, it's sort of leaving a bitter aftertaste for me anyway. But I guess we can't always get what we want. Getting close. Almost nirvana. All right, y'all have a great weekend. I'll do a weekend training video. We're going to have a training class in the morning. So we'll see you in the morning for my subscribers, and y'all have a good weekend.